Hi, I'm Mike McAllister, the Vice President of Sierra Metals for Investor Relations. Today I'm going to tell you a little bit more about our story and how we're advancing the company and where we're headed. Sierra Metals, if you don't know us, we're a growing and profitable, diversified producer, producing 5 different metals being copper, silver, gold, zinc, and lead. We're listed on the NYSE American under the ticker SMTS, and we're also listed in Toronto on the TSX under the ticker SMT. This is our forward-looking disclaimer, and we do seek safe harbor. So before we get started, I just want to give a quick update. We get a lot of questions about COVID, and people are wondering how we're affected by that. So throughout COVID, our main focus has been on the well-being of our employees as well as the local communities near which we operate. Unfortunately in Peru, the case counts have remained high, and we are taking all necessary precautions, including strict screening protocols where anybody coming back from a break has to go through testing, a quarantine period, and then they're tested again before they're allowed to join the active workforce. And even for the members of the active workforce, we continue to monitor them daily in terms of their health. And by doing this, we have mitigated any complete mine shutdowns, and we're able to continue our operations. The screening measures have done a great job. However, they have resulted in a suboptimal headcount as we weed out positive cases and send those employees for further health care. But however, the remaining employees have been very efficient, and we have still achieved what I consider excellent results for the fourth quarter. So Sierra Metals, if you're not familiar with the story, is a growing diversified producer. We have 3 different mines, including the Yauricocha Mine, which is located in Peru, and that's our flagship asset and produces all 5 metals. That accounts for about 60% of our revenue. We also have 2 mines in Mexico, including the Bolivar Mine, which is predominantly a copper mine with some strong silver and gold credits, as well as the Kusi Mine, which is predominantly a silver mine with just a little bit of gold there as well. Looking to the top right, you can see our pie chart there, which lays out our revenue mix for the trailing 12-month average. And you can see that copper takes the lead, followed by precious metals, and followed by our other base metals being zinc and lead. Going forward into 2021, we expect that silver will continue to grow on this pie chart, and copper will remain strong. Why would you invest in Sierra Metals? We're a growing and diversified producer. We have strong copper and precious metals exposure, and those metals are forecasted to do well going forward by a consensus of analysts. We have a solid balance sheet, including $64 million in cash, and that's enough, including continual cash growth, which is going to be enough to support our growth and our capital expenditure programs. We haven't actually raised any money through the equity market since 2011. We paid for all of our growth through our cash flow. We are profitable and have our cash flow positive. We had $24 million of free cash flow in the third quarter, and we expect to continue to build our cash position going forward. We have a successful history of building mineral resources, and including 29 million tons of additional mineral resources added in 2020, and we expect to be able to continue that growth going forward since we have several excellent properties. We operate in well-known jurisdictions, including Mexico and Peru, which have established mining codes. It's well understood how to get your permits there. And also, these countries have a long history of operating in mining, and it's easy to find well-established and well-qualified personnel to work at our mines. And we have an experienced management team which has well over 70 years of combined experience, with experience in operating mines and building mines and improving mines and maximizing on their efficiencies, which is going to contribute and help us to maximize the per share value for all of our shareholders. Taking a look at our capital structure, we have approximately 163 million shares outstanding. We have about $64 million cash on our balance sheet right now. We have about 35 million net debt currently, if you remove the cash from the debt. Also looking below, you can see our price chart here. The company has had successful growth this year, especially in the last part of the year, as base metal prices performed, and as we have reported our PEAs demonstrating solid growth. However, I do think that there's still a bit of an undervalue in the stock price, and based on the upcoming growth at our Yauricocha Mine, full performance from our Bolivar and Cusi mines for the full year this year, as well as upcoming PFSs, I think there's still a lot of opportunity for growth in the share price. You can see that we have research coverage from several banks, including Noble, and as most of you will know from this platform, you can research or you can access Mark Reichman's research on the company through the channelchek platform. We also have large institutional ownership. 59% is insiders, and that includes Arias Resource Capital. Alberto Arias is our chairman, as well as he's the chairman of Arias Resource Capital for 52%. The other 7% is insiders, including other management team members and the board. In terms of other major shareholders, we have BlackRock, which is not the ETF, but a fund out of London, which is for 8%. And we also have Leon Cooperman of Omega Advisors, who owns about 5% of the company. Taking a look at the opportunities for growth within the company, you can see here that in 2020, we were averaging about 9,300 tons per day. That was with Yauricocha at 3,150, Bolivar ramping up to 5,000 tons per day, and Kusi at 1,200 tons per day. Going into 2021, we do expect a permit, hopefully in the second quarter at Yauricocha, to increase our production to 3,600 tons per day. That 3,600 tons per day includes a 5% over allotment, which would bring us to 3,780 tons per day. So we would be looking at full capacity of just under 10,000 tons per day. Additionally, we've completed 3 PEAs which support our growth in the future, including bringing Yauricocha to 5,500 tons per day, doubling production at Bolivar to 10,000 tons per day, and doubling production at Kusi to 2,400 tons per day, which would bring us just under 18,000 tons per day across all 3 mines. As I mentioned, the 3 PEAs, you can see here a summary of the 3 different studies. They have excellent economics, solid IRRs for the expansions, very reasonable and low operating costs, and respectable line lives of between 12 and 14 years, which again are based on the study at the current resources. All mines have significant opportunity for further resource expansion and growth, which would continue to extend those mine lives. Again, as I mentioned earlier, we increased our mineral resources by almost 29 million tons in 2020, and we're going to be updating our pre-feasibility studies this year, which will allow us to then report reserves again, and we do expect to see our reserves increase as well. You can see by the 3 different graphs that we've had a history of increasing our mineral resource tonnage. We've recently increased the tonnage to 27 million and a half tons at Yauricocha, to 41 million tons at Bolivar, and to 10 million tons at Kusi. Again, this supported the decision to expand the projects and to increase production. Looking at our costs, you can see that on these charts here, the bars represent the cash costs and the all-in sustaining costs. The yellow line represents our average realized selling prices at the 9-month period. Looking on, however, at these charts, you can also see the Q3 numbers here. And looking at Yauricocha, you can see in the third quarter of 2020 that our costs all-in sustaining were below $2, and the current spot price for copper is $3.62. So there's quite profitable at this mine. Additionally, at Bolivar, you can see that the costs are below $2, and our current spot price there for copper is $3.62. So both of those mines very profitable. Kusi was in care and maintenance for the third quarter and the first month of the second quarter, and for the first month of the third quarter. However, we were able to get the mine back up and running out of COVID in the third quarter, and we were able to operate for approximately 60 days. During that time, we were able to see our cash costs, our all-in sustaining and cash costs come down to just over $15. Currently, the spot price of silver is at $25. So again, you can see that there's quite a healthy margin on the production that we're seeing out of Kusi. Additionally, we have put our costs into CRU to assess and understand where our mines fall on the general scale of all the copper or copper equivalent producers out there. And you can see that both at Bolivar and Yauricocha, we came from the 4th quartile at Bolivar down to the lower 2nd quartile. And at Yauricocha, we came from the upper 2nd quartile down to the lower 2nd quartile. Going into 2021, we believe there's a solid opportunity to see our cash costs come into the 1st quartile for the spectrum of companies that are included in this study, which keep our mines among some of the lowest cost producers out there. Taking a look at how we performed in 2020 and the guidance for 2021, you can see the actual production for 2020, and we produced copper equivalent pounds of about 118 million pounds, and that's on the upper end of our guidance for the year. Additionally, looking to 2021, we're looking to produce and increase that copper equivalent production to between 130 and 141 million pounds of copper. Down below that, you can see our costs for the year, which are very reasonable and on the lower end at Yauricocha and Bolivar. Kusi's cash costs are reasonable and low. Kusi, we're going to be spending a significant amount this year to improve and expand the mine, and so we do see some higher all-in sustaining costs there as we spend some of the CapEx there. Again, looking below at our CapEx guidance for the year, we're forecasting $78 million of CapEx for 2021. 10 million of that is a carryover from 2020, where we were just not able to complete certain capital projects due to the COVID-19 pandemic. However, $41 million of that amount is growth CapEx, and that's helping us to work towards expanding the mines through various tasks, including new tunnels and development, as well as putting in mine shafts and expansions there, as well as looking to expand tailings facilities and start to expand and work on layouts for future mine expansions. So although we're spending a lot here, this is all towards future growth, and we expect to pay for all of this through our cash flow. Looking to our EBITDA guidance, we're expecting between 155 and 170 million of EBITDA if we're using consensus pricing. And if we use spot pricing, we're expecting between 175 and 185 million dollars of EBITDA for the year. So very healthy growth. This year, we haven't reported our Q4 numbers for 2020 yet. However, we're forecasting between 100 and 105 million. So you can see that there's a significant increase in the EBITDA that's expected from 2020 to 2021. Taking a look at our financial position, again, you can see the shares across the top there haven't really increased from 2011, which is the last time we did a financing. In the 3rd quarter, we had revenue of $73 million, 170 for the 9-month period. We had net income of 17 million in the 3rd quarter, adjusted EBITDA of 37 million, and we spent about 8.5 million in CapEx. So in terms of the free cash flow, we had about 24 million of free cash flow for the 3rd quarter. And, we're expecting a significant increase again in the 4th quarter when we report our results. So at the end of the year, we do expect to see that cash and cash equivalents increase from that $63 million level currently. Taking a look quickly at our mines, this is our Yauricocha Mine. It's our oldest mine. It's been in production since 1948. When we purchased the mine, the central mine area is what was in existence. Since the time we've acquired the mines, we've had several new discoveries, including Cuya Mascota, Esperanza, Escondida. And so the closeness of these operations or these new discoveries show that there's a lot of brownfield opportunity still to be discovered at the Yauricocha Mine. We own 82% of the Yauricocha Mine. It's a very sizable land package. In fact, it's more of a mining district, including 18,000 hectares. And so we also have increased the mill throughput capacity, or will be increasing it to 3,600 tons per day here, hopefully in late Q1, Q2. And so again, this is a very profitable mine. You can see the layout of the land here. And you can see here, this is a new train tunnel that we've added underground, which basically runs underground, comes out of an adit right to the plant here. And I'll be highlighting that and again on another map coming up. Looking at our tons per day, you can see that the company has continued to increase our tonnage. We were at, in the 4th quarter, we were at about 3,500 tons per day as we were running the mill at higher throughput levels to make up from lost production at the mine during the earlier parts of the year. You can see also here, looking at our Q3 numbers, that our cash costs were down to 82 cents and our all-in sustaining costs are at $1.93. And we expect our lower costs to continue into the future. This is an underground long section of the mine. This train tunnel here was what I was demonstrating to you on the previous map. This connects the entire mine and exits the mine through an adit here, as you can see in this picture, right to where the crushing and grinding facilities are, as well as the waste piles. And so this is the central mine in this area here. This is Cuya Mascota, Esperanza, and this is Cachi Cachi. The mine is open at depth everywhere. We believe that most of these zones are consolidating at depth. However, we also have opportunity here. We're completing another connection of the entire mine here on the 1070 level, and that's allowed us to drill out this one target area in the mine, and we've had some success here, and hopefully we will be able to report these results soon, but we believe that this mineralization can continue and connect between these two areas, and so hopefully we'll be able to demonstrate that through some future exploration press releases showing the widths and the grades. Aside from the brownfield opportunities that are within the mine, we also have several greenfield opportunities. We completed a Titan 24 geophysical survey, which yielded over 100 targets on the property. Two of those targets that we're drilling on this year include Kilkasca, which is on a Chanta fault, which is an adjacent fault to Yauricocha, which runs for several hundred kilometers. There was multiple targets that were on this Chanta fault as part of the Titan 24 survey. We're going to be drilling on Kilkasca, as well as on an area to the north here called San Juan Don Leona. And so these areas are within 5 kilometers of the existing plant, and anything discovered in these areas could be produced or processed at the existing facilities. Again, though, we have 18,000 hectares, which is about 180 square kilometers of land here, with several opportunities along the Chanta on the Yauricocha fault. And so we believe while this mine has been in operation for 70 years, there's still a lot of life and a lot of opportunity for future mineral discovery on these properties. This is our Bolivar mine, which is located in Mexico. Quite interesting. The terrain is quite rugged here. However, it's an interesting photo here that you can see the copper bleeding out right through the side of the mountain. Here we own 100% of the mine, and it's about 15,000 hectares, which is a very large land package. The mill throughput capacity is currently at 5,000 tons per day. The PFS that we looked at for this property is looking to double this to 10,000 tons per day in 2024. 2020 production was 35.8 million pounds of copper equivalent from this mine. You can see here as well that through time we've been expanding production, and we're up to 4,300 tons per day in the fourth quarter. We're going to be working to 5,000 tons per day. Production was a little lower in the fourth quarter due to COVID and due to a shortage of employees and some labor disruptions. So we hope to, as we surpass and overcome the COVID disruptions, to be able to see this operating closer to 5,000 tons per day on a regular basis. Also here you can see that our cash costs in the third quarter were at $1.01 and our all-in sustaining costs were at $1.72. So very favorable costs considering that copper is currently trading around the $3.60 mark. So very good margins at this property. Additionally, as you can see here, although it's a copper mine, we do have very healthy silver and gold credits, which also help to drive up the value per ton for the mine. Looking quickly at the lay of the land here, this is the El Gallo ore body, which includes Mina del Fierro, which accounts for about 60% of the ore feed for the mine. Bolivar West here is a new discovery and accounts now for about 40% of the mill discovery. We also have some other new discoveries, Bolivar Northwest, Sanagita, and the Bolivar West extension, which were all identified additionally through Titan 24 geophysical surveys, and we've had good success when drilling these out. The grade in this area typically runs at about 1% copper equivalent, and in the Bolivar West area, you can see that we have an average of 2.55% copper equivalent on an in situ basis because of the higher gold and silver, as well as some slightly higher copper grades in this area. The other ore bodies are very similar in terms of grade in this area. So we're ramping up these mines. We're actually completing a tunnel that will connect all of these mines with the plant, shortening the distance to 3 kilometers versus the current 7 kilometers that we travel on surface roads. This will allow us to improve and lower our costs and improve efficiencies. It will also help us to, in the future, potentially move from using trucks to a conveyor system, and at some point be able to take tailings and bring the tailings back up the tunnel and put them in the mined out areas. So overall, continued efficiencies to be able to drive down our prices and improve our costs at the mine. And so Bolivar continues to be a significant opportunity for further growth for the company at low costs. Our final mine is the Kusi Mine here, which is located in a very highly established prospective silver district that has been mined since the colonial times. Here we own 100% of the mine. It's 12,000 hectares of land, again, a significant land area. Mill throughput capacity is at 1,200 tons per day now, and again, the PEA is looking at going to 2,400 in 2024. We had 1 million ounces of silver equivalent produced here in 2020. And you can see that we've been ramping up production. We are at 945 tons in the fourth quarter on a daily basis. And again, we were impacted here by COVID in the fourth quarter in terms of lower employee headcounts due to high COVID numbers. However, the employees we did have were very efficient and still produced a solid amount of production. And you can see in the third quarter, we haven't reported our fourth quarter numbers yet, that our cash costs were at $11.56, our all-in sustaining was at $16.47. And given that the silver prices are trending above $25, we still have healthy margins on the production coming from this mine. Where we're mining at Kusi currently is on the Santa Rosa de Lima vein, which is based along the Kusi fault here in this area. We started this area a few years back. We did a geological reinterpretation, looked at the andesite level. So we did about 29,000 meters of drilling. Almost all of the holes hit in this area, which is about 700 meters wide by about 400 meters deep. Since that time, we have stepped up production along strike, and so we now know that the strike goes for 1.7 kilometers, and we have 12 kilometers of this vein on our property. So not to say that every kilometer is going to hit, however, it does speak to the substantial opportunity at this property. What's interesting even more so is that we had a new discovery within the Santa Rosa de Lima zone here. This red line here is the Kusi fault. This is the Santa Rosa de Lima zone. In the northeast area, we had a new discovery here, and we had we drilled about 1,000 meters, and we had quite a bit of success. We had 17 meters of 428 grams silver, even 5 meters of over 1,100 grams silver. This is adjacent to our existing operations, and this is an area that we're already starting to access and we'll be able to bring into the mine plan in 2021. And so we're quite excited about this. We're going to be drilling another 1,000 meters on this, but so far the strike is about 300 meters, which we believe will continue to grow. And why this is very exciting for us is this area to the north was previously thought to be unmineralized. So even into the colonial times, this was never touched, and it gives us full access to all of the higher grade mineralization in this area. So we're quite excited about this. So overall, why would you want to invest in Sierra? We have a strong growth story with all three mines going through expansions, not only of production, but also seeing growth in resources. We're in first-class jurisdictions of Peru and Mexico, where it's very easy to operate, and the mining codes are established, and it's easy to find employees. We have a diversified asset base, strong exposure to copper and silver. So that gives us great opportunity for growth just based on the metal price outlook for those metals. However, we do have zinc and lead, and those diversified metals give us a bit of a natural hedge against the fluctuating metal prices. We've had a good opportunity or a good track record. We've continued to improve performance and efficiencies at all mines, helping us to drop our costs. And we have a solid financial position. We have $64 million in the bank right now. We expect to grow that position with continued strong cash flow across all three mines. And so that wraps up my presentation of Sierra Metals. And so we'll go to questions now with our analyst, Mark Reichman.
Thank you, Mike. I'm Mark Reichman, the Senior Research Analyst who covers the metals and mining sector for Noble Capital Markets. I want to remind our viewers, if you have a question, please click on the icon in the bottom right-hand corner of your screen and type in your question. So the first question is, when do you believe productive capacity in terms of headcount affected by COVID will return to normal levels?
Good question, Mark. The vaccines are not being rolled out equally across all countries, and I'm not sure that they're going to have access to the vaccines in Mexico and Peru as quickly as they would have it, for example, in the U.S. or Canada. Right now, we continue to, to plan on staying with our double fencing methodology. But I think it may be the mid-year before we start to see case counts drop and, have a full access to all the employees. However, we do encourage our employees to try and stay safe and stay healthy. It's a hard question to answer until we know, but a lot of that is going to be influenced by vaccine availability.
Well, just to add on to that question, would you say right now that the employee base active, are those numbers still trending downward? Are they stabilizing? Or when do you might expect them?
They're stabilizing, but they're still down from peak efficiency just based on the high headcounts there. We're continuing to work with it, but at this specific moment in time, yeah, we're still seeing lower than optimal headcounts.
Okay, then the second question is, in 2020, the company was slightly hit by the increase in zinc treatment charges due to issues in China. Have the charges come down for 2021, and if so, to what levels?
So I can't specifically say the levels because we don't specifically report our zinc treatment charges. What I can tell you is they are lower than they were in 2020. There's a significant savings. Those numbers have been baked right into our costs, which have forecasted for the year, and you'll be able to see through the costs versus year over year that they are lower based on the lower zinc treatment charges at Yauricocha. We're also going to see lower copper treatment charges as well.
Okay, and the next question is with respect to the permit for Yauricocha to increase the production capacity to 3,600. Is that permit, are all the boxes checked and you're just waiting for the permit to be delivered, or are there still some hurdles to clear there?
No, essentially all the boxes have been ticked. All the requirements have been met. Unfortunately, it's a large component of that is just because of the high COVID counts in Peru. The government is not operating at 100% efficiencies, and specifically the department that we're dealing with is not operating at 100% capacity. And so, unfortunately, that permit is delayed as the things ramp back up. But in terms of everything we need to do as a company, those boxes fall.
And then the next question is once you reach maximum production capacity by year-end 2024, what would you expect the mine lives to look like?
Well, you can see the mine lives based on the PEAs. That's a pretty realistic expectation. So we expect the mine lives to continue to grow, and we do expect increases in the mine lives. And you'll see those reported as through the upcoming pre-feasibility studies. But we have large resource bodies. We have a lot of opportunity. We're spending a significant amount on exploration this year. And so we do expect the mine lives to continue to grow. And not only that, we continue to replace what we've taken out. So you may not see huge growth, but one of the things is if you look, for example, at the Yauricocha Mine, the mine life has always trended around 5 to 7 years for the last 25 years because it gets more expensive to go to depth. However, we are looking at opportunities that are closer to surface, that are more brownfield expansions, and so those are easier to drill. So that provides some opportunity to expand the mine life. However, when going to depth, it's very expensive and you don't get a lot of return on spending a lot of money to grow out the mine life too far in advance. And so while we do expect to see continued or larger mine lives, I would look to the PFS to get a good idea of where we are.
Okay, then the next question is, are there plans to raise additional capital to finance development of those projects?
At this point, no. We believe that we can finance all of our capital requirements through cash flow.
And the next question is what will it take to move your costs down to the first quartile?
Well, again, as I mentioned, we have the opportunity to be in the first quartile this year with our costs. Those are different efficiencies that we're finding within the mines. For example, at Bolivar, we're implementing that tunnel, which is going to shorten the transportation time, be able to increase the amount of tons that are moving back and forth. Other things that we've done to increase efficiencies is we've expanded the size of the tunnels so that we can bring larger equipment into the mines. There's various efficiencies or productivity improvements that are happening that will help to drive those costs down into the first quartile.
And then I think what I would just end with is, in terms of obviously, exploration activity globally has increased given the, the rise in commodity prices. Where do you see kind of the pressure points in terms of whether it's, drill rig availability or, workforce availability? And how are you dealing with any potential increasing costs?
So right now we've locked in our drill contracts for the next little while, so our costs are stable for now. However, it's a well-known thing across the industry that as metal prices go up, inflation definitely hits, and your suppliers start wanting higher prices, especially if they're in demand and they have other opportunities. That's the key case of supply and demand. However, right now we're not seeing a shortage of drill rigs on our properties. We have the drill rigs that we need, some of them we own ourselves, so we don't have any issues there. Some of the areas that we're seeing are slower return times on the assays from the labs, because there's especially with increased metal prices, there's a lot more exploration happening, and so there's a lot more demand on those labs, process a lot more results. So trying to have an internal lab do some of the work and certifying those labs to work certainly would help. But yeah, I think the pressure points are going to be at labs and also drill rig availability long term, especially if metal prices continue to rise.
And then a question just came in asking if you could comment on any political or regulatory risk in either Peru or Mexico.
Speaking about Peru, Peru has, they've certainly made their the permitting process a little bit more stringent and a little bit more, thorough. Like there's a lot more to go through. It's more similar to Canada or the U.S. versus what it used to be. So definitely, getting a permit takes a lot longer than it used to. And the pendulum had kind of swung the wrong way. And the government has realized that and they've, made commitments to try and streamline that process to help get permits out quicker to encourage investment in the country. Politically, they've had, unfortunately, they've changed presidents several times in the last few years. One thing we haven't noticed, though, is any effect on the mining industry. Mining is a very important part of the Peruvian economy, and it's almost like it's kind of an unwritten thing. Don't mess with that too much. And so we haven't seen any, although the political parties are changing in terms of how it affects how we operate in the country, we really haven't seen much of a change other than the stricter regulations in terms of permitting. In Mexico, it's much easier to get a permit. Times are much quicker. However, with the new AMLO administration, there is some uncertainty around whether we'll see higher royalties or taxes on our operations.
Mike, I think that's about all the time we have. Thank you for joining us.
Thanks so much.